Hi everyone and welcome to the London Session Update with myself, Kathleen Brooks, on Monday the 8th of April 2013. Well, the big story has been dollar yen. We saw it move to its highest level since 2009. I'll show you the chart now. As you can see, you've got to go all the way back to the weekly chart for me to even be able to squeeze it in. And the reason for it was twofold. Number one, we got better than expected economic data out of Japan, which shows that what the Bank of Japan is doing is having some benefits. We got much better confidence data. We also got a better current account. Again, so that's all positive for giving the green light to what the Bank of Japan is doing, especially at this early stage of its monetary stimulus program. Secondly, we got the green light from elsewhere as well. The US, for example, hasn't voiced any problems with what the Bank of Japan is doing. In fact, it's been very supportive, again, suggesting we're not going to kick off a fuss about what you're doing with the yen, with the potentially weakening the yen. This is quite a big sea change for the US, because in the past they've been particularly moany about currency manipulation for China, but also not that long ago, only in 2004, Alan Greenspan actually complained about Japan itself. So we will be watching that one quite closely. But right now it seems like the green light is there. Likewise, the IMF chief, Christine Lagarde, said yes, great what Japan is doing. And rating agency Standard & Poor's, they also said this should have a good impact on the Japanese economy. So all in all, that really helped boost sentiment for dollar yen, weaken the yen even further, and we got to that 99 level. However, 98.90 is really thwarting the bulls in the short term and could potentially frustrate efforts to get to 100 anytime soon. Remember, 100 is the magic number, and the sentiment in the market seems to be there to push us that much higher. Now, we do like dollar yen. We think it will get to 100. But in terms of gains after that, we are a little bit skeptical. And the reason why is that dollar yen, while that has surged to 2009 highs, there's actually been dollar weakness elsewhere. So we haven't seen a complete rise. In fact, we've seen a very, very sticky dollar index. Now, let's take a quick look at euro dollar. As you can see there, nice recovery in euro dollar. Euro dollar's got above its 200-day moving average there, as you can see, which is the bright green line in that chart. We're also testing the 200-day exponential moving average at 130.20. So we will be watching. That's a key support level, key resistance level, sorry. We have been as high as 130.50. Now that is stalling the bulls. If we can get above 130.50, then we could see to 131.40, which is where the 55-day and 100-day moving average meet, or converge. Now we still are fairly bearish on euro dollar, particularly as we get some key economic data, industrial production out later this week. Any kind of economic data misses, we think could weigh on euro very, very hard. As we heard from Draghi, the ECB president last week, this is really turning from a sovereign crisis and a peripheral bond market crisis to an economic crisis in the Eurozone. So we think that means that the euro is going to be very sensitive to economic data, particularly economic data misses. So far, there's been no reaction to news about Portugal over the weekend, that its constitutional court was ruling the austerity plan unconstitutional, which throws into doubt whether or not Portugal will manage to maintain the market confidence it needs to go back to the markets later this year. Because essentially it's the end of its bailout program. So right now, no impact from that yet, certainly not on the euro. Likewise, the Portuguese equity index is actually higher today with the overall equity market in Europe. So as we head towards the US market, dollar yen obviously very much in focus. Whether or not we can get a daily close above 99, that's going to be key on the agenda here, with that 98.90 resistance zone. There also is the start of earnings season in the US. So obviously any earnings misses combined with a weak payrolls number, very weak payrolls number in the US. Now that could really knock sentiment towards US stocks later. But we'll have to wait till after the US close for that. Please do join us tomorrow for more. Thank you.